Real estate revolution. Can REITs and real estate ETFs unlock global property markets? The world of real estate investment is undergoing a seismic shift. For decades, direct ownership of physical property was the primary path to reaping the rewards of rising land values and rental income. This approach, however, was often capital-intensive, illiquid, and geographically restrictive. But the tide is turning, propelled by two innovative financial instruments: real estate investment trusts, REITs, and real estate exchange-traded funds, ETFs. This article, presented in AQA format, delves into the intricate world of global real estate investing through REITs and ETFs, uncovering their potential to democratize access, diversify portfolios, and navigate diverse market dynamics. So, buckle up, as we embark on a journey to answer the burning question: can REITs and real estate ETFs truly revolutionize the way we invest in global property markets? What are REITs and real estate ETFs, and how are they different from traditional real estate investing? REITs, or real estate investment trusts, are companies that own and operate income-producing real estate. They pool investor capital, allowing individuals to gain exposure to a diversified portfolio of properties, without the hassle of direct ownership and management. Unlike traditional real estate investments, REITs trade on stock exchanges, offering liquidity and flexibility. Real estate ETFs, on the other hand, are passively managed funds that track specific real estate market indices. They hold baskets of REITs, stocks of real estate-related companies, or derivatives tied to property markets. Similar to traditional ETFs, they offer the advantages of diversification, transparency, and lower management fees compared to actively managed funds. What are the benefits of investing in global real estate through REITs and ETFs? 1. Diversification. Global real estate markets offer exposure to different economic cycles, currencies, and property types. REITs and ETFs allow investors to tap into this diversification, mitigating risk and enhancing portfolio stability. 2. Liquidity and accessibility. Unlike traditional real estate, REITs and ETFs trade on exchanges, providing immediate liquidity and making them accessible to a wider range of investors with varying capital levels. 3. Reduced overhead. Direct ownership of real estate involves ongoing maintenance, tenant management, and legal concerns. REITs and ETFs eliminate these burdens, offering a hassle-free approach to real estate investment. 4. Professional management. REITs and ETFs are typically managed by experienced professionals with expertise in specific property sectors and geographical markets. This expertise can potentially yield superior returns compared to individual investors navigating the complexities of direct ownership. 5. Global reach. With REITs and ETFs, investors can access international property markets that were previously out of reach due to geographic limitations, legal hurdles, or lack of local knowledge. What are the risks and challenges associated with REITs and ETFs? 1. Market volatility. Real estate markets, like any other investment, are subject to fluctuations. While REITs and ETFs offer diversification, they can still experience significant price swings, particularly during economic downturns. 2. Currency fluctuations. Investing in international REITs and ETFs exposes investors to foreign currency fluctuations, which can amplify both gains and losses. 3. Concentration risk. Some REITs and ETFs focus on specific property sectors or geographic regions, potentially concentrating risk and exposing investors to downturns in those particular segments. 4. Fees. While generally lower than actively managed funds, REITs and ETFs still incur management fees that can eat into returns. 5. Limited control. Unlike direct ownership, REITs and ETF investors have limited control over the investment decisions made by the fund manager. 6. Lack of transparency. Some REITs and ETFs may have less transparent investment strategies or complex holdings, making it difficult for investors to fully understand the underlying assets and associated risks. How can investors select the right REITs and ETFs for their specific goals and risk tolerance? 1. Investment objectives. Clearly define your investment goals. Are you seeking income generation, capital appreciation, or a blend of both? Different REITs and ETFs cater to different objectives, so aligning your strategy with the fund's focus is crucial. 2. Risk tolerance. Assess your risk tolerance and choose REITs and ETFs with diversification and volatility levels that align with your comfort level. Remember, higher potential returns often come with increased risk. 3. Fees and expenses. Compare the management fees and expense ratios of different REITs and ETFs. While lower fees are attractive, prioritize a fund's overall performance and investment strategy over minimal cost differences. 4. Underlying assets. Research the types of properties and geographic regions included in the REIT or ETF. Ensure the fund aligns with your desired sector exposure and diversification needs. 5. Track record and management. Investigate the fund's performance history, its management team's experience, and their overall investment philosophy. Choose a fund with a proven track record and a management team you trust. Where does the future of global real estate investment with REITs and ETFs lie? As we stand at the precipice of a transformed real estate investment landscape, the question inevitably arises: what lies ahead for this burgeoning arena? The crystal ball may be cloudy, but several trends hint at the potential trajectory of REITs and ETFs in shaping the future of global property markets. 1. Technological transformation. PropTech innovations, from virtual reality property tours to data-driven investment platforms, are poised to revolutionize the industry. REITs and ETFs could leverage these advancements to enhance transparency, improve tenant management, and optimize asset allocation, potentially leading to improved performance and accessibility. 2. Sustainable investing. Rising environmental concerns are driving demand for green buildings and energy-efficient properties. REITs and ETFs focused on sustainability-oriented portfolios could attract a growing pool of ethically conscious investors, potentially opening up new avenues for growth and outperformance. 3. Democratization and inclusion. One of the most exciting possibilities lies in the potential for REITs and ETFs to democratize access to global real estate markets. By lowering entry barriers and offering fractional ownership, these instruments could empower a broader range of investors, including those with limited capital, to participate in previously exclusive markets. 4. Niche and thematic investments. As investor preferences diversify, we may see an emergence of specialized REITs and ETFs catering to specific niche sectors, such as senior housing, student accommodation, or data centers. This trend could offer investors targeted exposure to high-growth segments of the global property market. 5. Regulatory landscape. Regulatory developments, particularly in emerging markets, could play a significant role in shaping the future of REITs and ETFs. Streamlined legal frameworks and clearer tax regimes could unlock further growth potential by boosting investor confidence and encouraging market participation. Ultimately, the future of global real estate investment with REITs and ETFs remains intertwined with evolving market dynamics, technological advancements, and regulatory landscapes. However, the inherent benefits of diversification, accessibility, and professional management offered by these instruments suggest a bright future for their role in democratizing and transforming the way we invest in property across the globe. As we conclude this Q&A exploration, it's clear that the potential of REITs and ETFs to revolutionize global real estate investing is no mere pipe dream. Armed with informed strategies and a clear understanding of the opportunities and challenges that lie ahead, investors can harness these powerful tools to navigate the exciting frontier of this evolving landscape. So, keep your eyes peeled and your portfolios primed, as the future of global real estate investment promises to be a thrilling journey indeed.